So SpaceX is today. The IPO is today. Initial public offering. And I think it's going to be a wild ride. I really think it's going to be a wild ride. So let's start with the fundamentals of what my expectations are. I think this thing has the potential to, in terms of the pricing, be extreme. I mean, I think this thing, and not just the opening price, but also a surge, a significant surge to very healthy price. But my concern is what happens next. And a couple things going, a couple layers here. We have a real company, SpaceX, so I wouldn't want to knock SpaceX too hard. I mean, let's not talk too much about the blowing up of the rockets and things like that. You got to break some eggs to make an omelet, right? I'm gonna leave the company alone. I think the company, there's some solid and very real things there. But it's not the company itself, it's the hype surrounding the company, hype surrounding not the company, but rather the IPO. We've seen, and I get it's sort of the shorthand way to look at this is, look at what happened with Elon Musk and the X acquisition, right? A lot of hype, Elon Musk, Tesla, anything he does is great. And we see how that turned out. Like, what's the value of X right now? It's not looking too good, right? Now, to simply compare X to SpaceX would be foolish, obviously. The main link is that it has X in the name, right? X is in the name. But there are some very strong things that are very similar, right? This is an Elon Musk company, and Elon Musk does what he does. He has kind of cult following. He is very good at, let's just say, massaging the markets, massaging sentiment. And there are people that no matter how many failures he has, they just, anything Elon is good, right? So that's a real thing. But I think the big risk here is excellent content for, I do videos where I explain financial concepts and investment banking, technology, and the business side of things. I did a video, I think, about something called momentum trading. And I think what we're about to see will be excellent content to demonstrate exactly what momentum trading is and what it looks like, because I think we're about to see a lot of momentum, right? A lot of momentum going up. Unfortunately, I don't know how long it's going to take, but I think there's going to be a pullback, a correction. So I'm going to take an opportunity to remind you about how that works. So we start with the company that has some solid fundamentals, right? Can't argue against that. There is something real here, right? That is the reality, right? And ideally, we'd want to see the market sort of align with reality. So reality is here, right? Let's say here, right? Then we add on top of that Mr. Elon Musk and his cult following, right? That pushes us up to here, right? That's that sort of hype monster that he's able to create. And this is not to scale. I'm just saying in general, you start with the fundamentals and you add up to the Elon hype. And then you put that on steroids. This is, I think, if you want to talk about a hype monster, this has got to be one of the biggest ones that we've seen, because it's rhetoric about Elon Musk becoming the first trillionaire. So that alone is creating a lot of news cycles, right? They're looking at this being one of the biggest IPOs ever. The valuation is competing with massive companies. So there's a lot to talk about. There's a lot that's, getting a lot of attention, a lot of stories, right? And that works, right? The more people talk about it, I mean, why do companies spend millions of dollars advertising or branding, doing branding where they want to put their logo in, content? Because it sells, right? The more you hear people talking about Elon Musk and SpaceX and he's going to be the first trillionaire, this is going to be the biggest IPO, this is going to be this and this is going to be that, and blah. The more you hear that, it's basically free promotions, right? You're building up a lot of hype. So on top of the already, the Elon Musk standard hype monster, you have an extra sort of adding to that where it's just, there's so much rhetoric that, where people are focused on this, right? So this is going to be one of the things that kind of sells themselves. Translation, there's going to be a ton of people that are going to be very much interested and focused on, ooh, gold rush, there's money to be made. And there will be a ton of money made. Some billionaires are going to be made. Some billionaires are going to multiply their incomes. However, again, it's the what comes next. So in short, in terms of long-term growth, I'm a little bit concerned. And again, that's not necessarily a knock on the company. Can do really well, and yet we still have this massive surge and then a massive decline. And it could continue to go down for a while, or it could plateau at a much lower level, which means a lot of the early people that jumped in on the gold rush lose money and never get a good return. Now, obviously, I'm coming from an institutional standpoint, so today's a big day for us. We on an institutional level are going to do very well, I presume, with all the technology and the infrastructure that we have, the advanced strategies and mechanisms and, access to the syndicate, So obviously, with the IPO process, there is sort of the retail market, but then there's the before that, right? the initial people that are going to get these initial, that's what I call IPO, right? Initial public offering. There's going to be the people that are going to be the initial holders of shares of this company, right? And in that world, because you're going to get that really low price, in that world, you can make massive money on an institutional level on the surge, all the hype and SpaceX, but not as much of the risks, because with the sophisticated systems and the speed, high frequency trading, I've talked about the differences between that and normal trading. I mean, it's just mind-boggling. Thousands and thousands of transactions within a blink. So nanoseconds, right? That's the actual world that they live in. So with the sophisticated strategies and the massive performance advantages and the access to real-time data, so you can respond very quickly within nanoseconds, for co-located setups on the exchange force, you're able to grab a lot of the hype energy and all the retail people getting excited. SpaceX, we're going to be rich, it's the biggest, whatever, right? And protect yourself. There's hedging tactics where, you offset the risks of your position. So you're long SpaceX, but then you short something else. So, if you take losses on one side, you take gains on the other side, ideally. But also just the ability to move quickly, to react quickly. So you have sophisticated models that can detect that things are cracking, and then you can start lowering your risk by reducing your position size. Sell, you do all kinds of stuff, right? VWAP, TWAP, whatever it is. There's some sophisticated algos where you can quietly but very quickly offload your position, offload your risk, and by the time the dust settles, you don't have much exposure. But unfortunately, what will happen is on the institutional level, we'll be able to, nothing's perfect, obviously. Institutions do take losses. It's not a thing that we don't take losses, but I'm anticipating probably going to do well on an institutional level. And by the time the dust settles, on an institutional level, a lot of the exposures have been massively reduced. And what ends up happening is kind of a musical chairs thing where the retail investors are the ones that get left, holding, this thing up, as it collapses to some degree. Quote unquote collapses, right? Because collapses I will define as it settling down to a more realistic valuation, right? So it'll be a healthy price. It'll probably do well once correction happens where it settles to an appropriate price. But the problem is, for all the people that bought into the hype, and you don't have sophisticated systems to pull you out when you need to, good luck on that one. So if I'm a responsible retail investor, I'm looking to wait out the initial hype and let it settle, and then jump in when I think is a good time to jump in. But I don't want to be too close to the front of the line, right? The real front of the line is people who get to the initial shares, right? Once retail gets involved, you're kind of outside of the wave, right? So you have a lot of risk. Things can go your way, right? I could be wrong, and it rises and continue to rise. And I'm not saying we'll do that. The thing is, how long will it be going in an upward trajectory before, and there's AI things happening. That's kind of House of Cards-y. So there's a lot associated with this that is very dangerous in my view for a retail investor. I know it's tempting, and even it was tempting, not to long term for sure, to take advantage of the initial wave, but I'm going to sit this one out. And then after it settles down, even then, with potential market crash coming, not directly associated with this, I'm not looking to hold something like SpaceX that's associated with such a, let's say, volatile CEO. So my only bet on SpaceX from a retail standpoint is potentially getting in early, but not holding it for very long at all. And I wonder how many other people are thinking in that same way, which would lead to the momentum of it reversing, right? Because if I were to invest, when people like me start pulling out, and I'm not the only one who thought like that, other people are pulling out, then others will observe this dipping of the price that we cause, and they'll say, oh, man, it's collapsing, and then they'll start selling. That's the momentum. And then other people see it, and then they say, oh, it's collapsing, and they sell. And then selling begets selling and more selling, and then it's like it starts crashing, and then it potentially it falls so fast that it goes below what it should be, and then maybe some sophisticated institutional investors that already pulled out early see that it's falling below what it should be at, and they jump in once again and get those discounts and sit it out because they can afford to, and wait for it to rise up to where they think it should be, and then they determine whether they want to be long-term holding or just take short-term gains or whatever it is. But that's the way I look at it. So I think one thing that is for sure, it's going to be a wild ride. No doubt about it. It's going to be an absolute wild ride. I don't think that's shocking to anyone. That's going to be shocking to anyone. And today is going to be a very interesting day, shall we say. I hear a lot of buzzes coming through on the teams. Everything looks good so far, but let's just see how we make it through the day. Anyway, this is Carlos Speaks Wall Street. Tell me what you think about SpaceX. Are you gonna invest or are you gonna sit this one out? Me, I'm gonna sit this one out. I'm gonna sit and watch it rise and go crazy and think about all the money I could have made. And then we're gonna see what happens next. That's the most important part. Not the initial surge, but what happens next. And again, it may not fall like a rock. It could take a while where it's dipping down, but people are like, that's just momentary. Or there could be initial correction, right, where it drops significantly and people are like, oh, it's falling out, and they, momentum. But then it stabilizes and people are like, oh, it's good now. And then it kind of stabilizes and people are like, oh, we made it. And then there's a secondary correction and it goes even lower or it goes up. Who knows? All right, guys, until next video, this is Carlos Peace Wall Street.